Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, February the 21st. The year's 2021. Let's talk trading. It's time for the weekly open and gap. And just so you know, these videos are for educational purposes only. Your results may differ from mine. And let's just, once again, I want to remind you, risk management, probably the most important thing in trading. Making sure that you don't risk and lose any more than you are willing to lose on any one particular trade. And brain management, also very important. No fear, no regret. And finally, money management. We call it the three-legged stool, or you could call it the pyramid of trading. The money management, the brain management, and the risk management. So just remember, if you've got a nice profit, you better take some or all off the table before the market takes it back. In fact, I was talking to a trader today, contacted me, and he said he was up nice. He wanted like another half cent or whatever, and the trade went against him. So let's not do that anymore. All the pairs except for one, which the pound dollar has filled the, oh no, I guess two have filled the gap so far this week. So gap traders, if you actually had an opportunity to get in, were already rewarded. If you notice, I did change the dollar TRO time indicator. So now what it does is it gives you, for every hour, you can give yourself a message. And then for every month, you can give yourself a message. And these messages were taken out of the seasonality of the pound. Okay, so that's what these messages are. But you can customize it any way you want and make different versions, put them on different charts, save the templates. So I hope some of you find that tool handy, and it's out there for free over on Crestlick.com. And right now we're 20 pips above the open, 20 pips, or now 21 pips off the high, 25 off the low. So the pound is already making some movement here. As you can see, it broke out above that previous high, even without the horizontal line, putting in, right now it's putting in the weekly range. So for the year, 389 pips, 388 pips over the open. Now for the month, 329 over the open. And for the week and day, 19. And we've got a red H4 candle forming. No inside bars in sight. Won't be one again today. Okay, what do we have here? The range, no pairs over 100. On the buy zone, we have the pivot point once below the open. So far, we haven't had much activity below the open, but now price is heading south at the moment. You can see the range is still too low, even though we do have some separation. So if the red rats maybe started feasting here. Let's shift this over to an hourly chart for today. There's our pivot for the day, 39.97. Our weekly pivot at 39.56.5. We missed the pivot today so far. We missed the pivot on Friday, so we don't hit that pivot. That's two missed pivots in a row. Doesn't happen that often. And right now we're in that upper wick zone from the previous day's candle. Looking at the ranges, we had 84 on Friday, 46 today. So we're still in the 0 percentile there. Notice though that 84 was only to 23, so looks like things may be slowing down a bit on the pound. And we can switch this back over to H1 candles, simple wall trades. Right here, you take the candle color at the line. So there was a long trigger here at 40, paid off. We're now getting a short trigger at 30. Looks like it could be starting to pay off. Real simple trading there. Nothing fancy. In fact, that trader I was talking to today, trying to help him out, found out that he didn't really have a trading plan. He's kind of do it seat of the pants. So he's doing some crypto, which looked pretty interesting. In fact, the crypto he was trading had looked like on the ranging about maybe 10%. I mean, price changes, 10% of the range. It was like a $2 and something instrument, and the range was around 22 cents a day. So definitely a trader, possibly a candidate for the buy zone. Um, Maybe a candidate for the previous day's high-low breakout. Haven't really analyzed it because my platforms aren't doing crypto, but I think there's another one on MT4 that does. So I might even sign up and get another broker just so one, I can help them out, and two is now I'm kind of curious to run some stats on the cryptos. I think it might be really interesting to see how they're playing out and if there's something to be exploited. One of the things I think we might talk about later in the week about trading is that, you know, I think a lot of traders um, are taking like a classic approach and they're not meeting with much success. I think you have to take an alternate approach, which is statistics, which puts you in the shoes of a casino. A wall mall trade's a perfect example. Does every wall mall trade win? No, it doesn't. Um, but if you look at it, there's an opportunity almost every time that price hits the line. So we can shift back down to M1, and this hour just started. So on this hour, there was an opportunity right here. It just happened while I was talking, making this video. You could pick up a couple of pips. Now, on the previous hour, I pointed out right here, you took that trade, you could had about 10 or 11 pips if you took that trade. So, what is it you're trying to do? That's something you have to have in a plan. I asked him about his exit playbook. He didn't have one. It's like, you sit in a trade and it makes you, I don't know, a couple of pips. Well, what's your plan? Is your plan to get 5 or is your plan to get 2? So if your plan is to get 2, then you take it. I mean, it's just so important to have that exit playbook. And then on the entry side, I mean, with the wall mall trade, it's simple. There's no thought involved. Price at the line, you go with the H1 candle color. And with the sweet spots indicated the way I modified it, if price is moving down to the red line, you go short. Up to the green line, you go long. Those are your trades. There's no other trades there. You can just look at those lines and just take the trade. As I mentioned earlier, sometimes you need to take that profit before the market takes it back. Sometimes it might be a pip, might be just 2 pips, sometimes it might be 10, but it's profit. It all adds up. And where you place your stop loss, that's a function of your position size and your risk. I mean, if you want to place your stop loss on either side of these lines, so if you're going long, if you place your stop loss here, you're going to have a smaller position size, and a 1 pip profit's not going to be as much. But maybe you might make a tighter stop. You might look for something that indicates price is going to go against you and not coming back. And might get into that later in the week, some of those clues. But, I always say it's not what you trade, it's how you trade it. And many people, traders, don't really have the how in their plan. And that's something that's really key, is how you trade it, and to know the instruments. So that was some of my advice to the trader. I said, you got to run the statistics on it. You got to know what you're dealing with. You need to know, the range, not the average range, but the frequency distribution. How many times is it, 10 cents? How many times is it 20? How many times is it 50? Is it ever a dollar? You need to know these things, and then you divide the range from the high minus the open and the open minus the low. So okay, if it's going up, how much should I expect it to go up? And once again, it's a frequency distribution. Most of the books and the other videos and the other courses or whatever, they're always talking about either the ADR, average daily range, or ATR, average true range. But I think I've shown you, my various frequency distributions, where it's, having a frequency distribution is far superior to average. Because let's just say the average of something is 50, but most of the time it does 30. You're waiting for 50, it does 30 and reverses. So if in frequency distribution 30 is the target, it goes 30, you take it. How many times does it go past the 30 to 50 and beyond? Based on statistics, not that many. So you take that fat, you take what you can take. And part of trading like a casino, or approaching trading as you are the casino, is that you set up the game so you win over time. And in the casinos, their odds are just very slight, but they're the ones building those tall buildings and giving out free drinks. That's because people go in and they gamble, they lose, and the house wins. So you have to trade like you're the house. So, and that part of one way to do that is knowing the statistics, keeping up to date on it, doing your homework, before you pick an instrument. I was telling the trader, the problem with most traders is they get a new indicator, whether it's MACD, stochastics, RSI, and they try to use it on everything. They never do their homework and go, okay, out of all the instruments, which ones work best with this indicator? That's like showing up to work on a car and all you have is a screwdriver. It's like, yeah, but if you're working on the engine, you might need a set of wrenches, but you came with a screwdriver. That's not going to work too well. So, think of indicators as tools. And so, depending on the job, which would be the instrument, you have to match the tool to the job, or the indicator to the instrument. So for example, on low range pairs, I wouldn't do the buy zone. Or if I did do the buy zone, I would have to definitely change the trigger lines, because if it only ranges 30 and I've got my trigger lines, the buy and the sell, there's 20 between it, there's no room for me to make any profit. It's slim and none. So I might have to narrow those lines, where instead of it being 20 pips between them, maybe it's only 10 pips between them. Maybe it's only 8 pips between them. Once again, I'd run a frequency distribution to see what that is. And so as you can see here, price crossed down through the Walmart line here at 30, came back, and then moved this way. And so if you had your break even, if you move your stop loss to like break even +1, let's see, actually it missed it by 1 point, because that says 28.9, and so you'd still be in that trade. But anyway, traders, I hope that helps. Hope you have a profitable week this week. And just remember, when you sit down to trade, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out. Oh, and if you're new here, please hit subscribe and hit like